Hi everybody, and welcome back to FANG Friday. This is Ross Healy, the Chairman of Strategic Analysis Corporation and a Senior Portfolio Manager at McNichol & Associates Asset Management. Well, this is reporting week for FANG Friday, and 7 of the 8 FANGs have now reported. If I can continue to include Netflix as a kind of a pseudo-FANG. So today is the first day with almost everybody in. Almost every one of the FANGs are focused on AI and what that means, or hopefully what it means to those companies going forward. There have been 2 or 3 nice surprises in the numbers, and of course, most of the FANGs are putting on a brave face going forward in the expectation that AI-generated improvements are in the wings. Having said that, I don't see any changes in trends that were not already in force this week. Some, but not all of the balance sheet updates are in our charts today, and all will be uploaded by our data supplier when we meet next week. The most critical update, of course, will be Apple, when we find out what the impact of its $32 billion share buyback will be. So stay tuned. I am still strongly of the view that things are closing in on the time when we should be very increasingly wary and selective as to the stocks that we are holding. The supply is most strongly to the growth stocks in the NASDAQ 100, as both times in recent years that the NASDAQ has reached its HB1 price, that's 9.5 times book value, it has suffered significant setbacks. Well, it's got 5% to go. Anyway, without further ado, let's take a close look at what happened this week. As always, before I do like to say thanks to everyone who likes this video and all our subscribers. It really helps to grow our channel, and we appreciate it greatly. Okay, we'll start off with NVIDIA, and not much to say because they haven't reported. The stock just continues to float right along its HB7 price. That's 43 times book value. We're going to need those earnings to see if it's going to have any significant departure from this level. Now, Amazon reported some very nice numbers. And after a little sort of a quick setback yesterday to its bubble price, the stock is up strongly today, about almost 6.5%. Their revenues were very nice, but their net income, I think, was even better. Revenue sales up 11%, but net income up 52%. So, good gains, and the stock continues to move along its bubble price. And of course, we continue to hold because the growth of that balance sheet is roughly running at about, let me see, well, it has been running about 23-25% annually. So as long as it stays there, we have decent growth. Alphabet had very nice numbers. Actually, their revenues grew about 15%, but their net income grew at 37%, and the stock, after kind of fading a little bit the previous week, has picked up. And maybe it'll get to my bubble price target yet, and maybe it'll do that before the stock market, the NASDAQ, reaches its target. Well, we'll wait and see. By the way, growth next year, forecast quite interesting. Alphabet, as I say, Apple, we need to wait here. They had a huge share buyback, I think of $32 billion. So very clearly, we're going to be able to take those structural prices and pull them down to somewhere, whether it's in line with this trend here or where, I don't know. Hang on, next week we'll see. Microsoft, well, they have been promising that they're going to disappoint us, and they did. And the stock had a fair setback on that sales and earnings disappointment, sort of a non-disappointment, disappointment, I almost would say here. Has rebounded a little bit today. It's almost got to my HB1 price of 9.5 times book value, which I've been watching for some time. Meta had nice earnings. They beat their estimates, by the way, and their earnings were up some 34%. So again, see, it's starting to look after some weakness the previous week. It's kind of picked back up again, and it may get to my HB1 price. We will have to see. Tesla banged up against its HB2 price. Revenue up 8%, earnings up 9%. When you got a valuation this high, frankly, who cares? And look how far down the fair market value is. A more than 75% is required before this stock would be good value. And given its growth, and I would suspect, given the growth outlook for electric vehicles in the next 2 or 3 years, I would expect lower prices still lie ahead for this stock. Finally, Netflix had some lovely numbers. Revenues up 15%, but net income up 45%, and that may well be due to the fact that they've kind of shut down the password sharing that allows people to more than one person to access their service. Anyway, in summary, NVIDIA hasn't reported. I have no update. Like those Kleenex table napkins in that commercial, the share valuation just clings like cloth to the HB7 price. Amazon had terrific numbers with sales up 11%, but net income a scintillating 52%. Consensus growth expectations for next year is plus 19%. So it's no surprise that those numbers have brought a nice pop in the price today. Meta had nice revenue numbers and scintillating net income results. No change in the buy-hold recommendation that came as a result of its dead hit at its MSG price, 5.5 times book. Consensus growth expectations for the next year are 20%, so I would expect that the bubble price should hold, but maybe, just maybe, the HB1 price will come into play. The new Apple balance sheet will be in our database by next Friday, and we'll see what has transpired. Mysteriously, the company is buying back shares and reducing its equity at the same time that it is raising debt securities. You work that one out. Consensus growth expectations for next year remain at the 5% level. And I remain from Missouri that we can call this a growth stock. Microsoft has not unexpectedly disappointed, and the shares are set back almost to my long-awaited HB1 price target of 9.5 times book. Consensus growth expectations for the next year are only 11%. And I will be watching with interest to see whether even that valuation level can hold. Meta recovered this past week on strong earnings that were up 34%. Consensus growth expectations for next year are plus 20%. And the shares are holding in after a little scare last week when it looked as if my hoped-for target, its HB1 price of 9.5 times book, might not be realized after all. Cross fingers. As far as Tesla is concerned, it leapt from the near dead almost up to its HB2 price or 12 times book as Elon Musk managed to conjure up another rabbit. It's done nothing since then. No breakout in evidence. Analysts that cover Tesla expect revenue to increase 3.4% in 2024 with a 24% dip in earnings, but are expecting that in 2025, revenue will increase by 16.3% and earnings by some 35%. So once again, it's all on the if come for this stock. Finally, Netflix is holding just above its HB2 price. That's 12 times book on nice revenue growth and strong earnings growth of 45% as the company has moved to shut down service sharing. Consensus growth expectations for next year are 20%, but for the next 5 years, it is plus 26% per year. All in all, a promising earnings season for the 7 FANGs that have reported. Ahead lies the HB1 price for the NASDAQ 100, and we will see how the FANGs hold up when it gets there. Anyway, that's all for this week. For now, this has been Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at Nickel & Associates Asset Management, reminding you that nothing, including investing, is difficult.